What's up guys, Bill Hawk here, and today I'm going to be talking about one of the hottest IPOs of the year, Robinhood. So it started trading this week at $38 a share, its IPO price at a $32 billion valuation, but it dropped on its first day 8%, so it actually started off not so hot. But now today, I don't know what's happening, but this stock is going parabolic. It's trading up 30%, and after hours right now, it's actually at $50 a share, which is insane. So let's take a look at some of the fundamentals and try to understand the long-term potential of this company and whether it's a stock you should buy into. It's worth noting that Robinhood appears to have gotten Cathie Wood's vote of confidence because she bought 3.15 million shares after the IPO, and right now in today's prices that's over $150 million, so she's sitting on a pretty good gain there. She did pretty well, but the question is of course not what she's doing but what you're gonna do. And I want to know first if you're gonna be hitting the like button and subscribing, because it truly helps me out with the YouTube algorithm and it makes me feel like I'm actually talking to somebody and making a difference. So I really appreciate it if you do that, and let's get back to this video. First, I want to address some of the hate or the controversy surrounding Robinhood, because it's important to separate our emotions from our logic. It's important when investing to keep an open mind, and this applies to business or anything else. But if any of this stuff contradicts with your beliefs or your ethics, then in that case I completely understand and it's okay to draw the line. Robinhood users have experienced several outages in the past, and the biggest one was actually in March of 2020 where trading was stopped for 2 days, and they had to recently settle this in a lawsuit for $70 million. But this doesn't include the GameStop short squeeze, which is a whole different story. If you're not already aware, the GameStop short squeeze took place earlier this year when retail investors, particularly from Reddit's Wall Street Bets, drove up the price of GameStop to $500 in the pre-market, or 30 times its valuation earlier in the month. And because of this surge in retail demand, clearinghouses required brokerages like Robinhood to put up more capital, more than 10 times the normal levels, to factor in the risk. Robinhood responded by temporarily halting trading of these meme stocks like GameStop, which resulted in the stock dropping 85% from its top. So retail investors were naturally pissed at Robinhood because they felt they were manipulating the market and helping out the hedge funds who were shorting the stock. So there's a lot of emotion there and a lot of controversy. But let's, like I said, put all of that aside and let's understand what is Robinhood's business model. Robinhood's mission is to democratize finance for all, and they're doing this by creating a user-friendly mobile-first app that enables quote-unquote commission-free trading, and I'll explain the quotes later. But this is how they've achieved rapid growth and benefited greatly from the rise in retail participation in the markets. Robinhood grew its users from 2 million in 2017 to 18 million in 2021. They hit an inflection point of growth, which you can see here during the 2020 pandemic lockdown, because the markets were primed with potential and people were looking for ways to make money from home, and this was the perfect recipe for growth. Most Robinhood users are pretty active. In fact, most funded accounts are active each month, which kind of makes sense, and I'd be worried if it was any other way. Assets under custody is the total user funds that are invested through the platform. That number today is $80 billion, which is up 320% from last year. ARPU, or average revenue per user, also grew 65% year over year to $137. Before we attempt to break down or project any of Robinhood's revenues, it's important to understand how they make their money. So they market commission-free trading, but they actually make money on the back end of transactions through a method called payment for order flow, or PFOF, which is another gray area of controversy. PFOF is the kickback a brokerage firm like Robinhood receives for directing trades to third parties or market makers for execution. So from here you can see a customer instructs a broker or Robinhood to execute a stock trade, then the broker passes it on to a wholesaler, which is the market maker or clearinghouse, who then basically executes the transaction and kicks the broker back with a small fee. So instead of the orders going to the market, the clearinghouses provide liquidity for routing orders and taking on the risk of the bid-ask spread. The reason why this is controversial is because there's a potential conflict of interest as to where the brokerages sends the trades for execution. They may not have the client's best interest in mind of the lowest price or the fastest trade in mind, but instead they may have their own interest in mind, which is getting the biggest kickback from these market makers. But there's been regulations where these brokerages need to reveal the quality of their execution. So we can actually see that stuff on Robinhood's website. From their disclosures, you can see that Robinhood is actually saving their customers $1.12 per 100 shares on average, and their trades are at 95% at the national best bid offer or better. So they're actually net saving customers money here. There's a more detailed explanation to this that I'm leaving in the description, so if you're interested, check it out. I personally don't see an issue here, and I think that Robinhood is actually saving net customers money. And although this is controversial, I think that they've done a great job at opening up trading, making it commission-free, quote unquote, for retail investors, and actually encouraging more trading. So I think they're actually doing a good job, and I don't think there's anything to worry about here. And that's just my personal opinion. Valuing Robinhood is a very difficult task because it's not clear to me where their future is. It's very clear that they've benefited from a surge of retail trading and retail participation in the markets after COVID. People were bored at home, they had nothing to do, they're looking for ways to make money from home, and this increased retail participation. Historically, retail participation has always been cyclical. There have been highs, there have been lows, and right now, we're clearly in a high right now. Is this going to continue? Likely not. How many of these people are going to continue trading? How many of these people are going to continue watching these videos on YouTube? I hope it's a lot of you guys, but historically, there's always been peaks and troughs, so it's natural that some of this is going to cool off. And Robinhood obviously did a great job at taking advantage of this and IPOing right now because this is where they're going to get the biggest valuation. Robinhood CEO Vlad sold $45 million of his shares on IPO, and their CMO actually dumped all their shares, which was about $3.5 million worth. But just a fun fact, Vlad's shares, had he not dumped them on IPO and kept them today, that would have been an extra $13 million, and I actually don't feel bad for him. I think he did pretty well. But whatever, let's just ignore that stuff and focus on the numbers. So if we assume that AUC is a fair representation of their transaction revenue, we can see that equities make up 80% of their transactions and cryptocurrencies make up 15%. And we know cryptocurrencies is cyclical. Cryptocurrencies are also on a high right now. They're eventually going to cool off. Historically, they've always been cycles. So what's going to happen when we're experiencing the crypto winter? In fact, 34% of their crypto revenue in Q1 came from one coin, and that was Dogecoin. So I'll just let you interpret that on your own. Because it's so hard to forecast their revenues and earnings, I'm gonna focus on looking at their historical results. And as you can see here, Robinhood had a profitable Q1 2021 if we ignore one-time items such as change in fair value of convertible notes and warrant liability, which is relating to debt they raised following the GameStop saga, legal settlements, and whatnot. Their adjusted EBITDA is over $100 million. For simplicity, I'm going to assume EBITDA equals earnings, and I'm going to assume a $400 million per year annualized earning, which means that cryptocurrency trading and stock trading has peaked, but it's not going down from here, and it's going to stay steady with a steady growth, which again, we know there are risks that it can go down. I don't know how this is going to keep growing, but let's just say that it's normalized. In that case, we're trading at a $32 billion valuation at $38 a share. That's 80 times earnings. But where we're trading right now at $50 a share, that's over 100 times earnings. So to be honest, it kind of makes zero sense to me. I mean, it does make sense to me, but it just means that a lot of growth is already priced into their stock. But it's not clear to me where this growth is coming from, given that we're in an environment where retail participation is probably at its peak. But you know, where's the rest of the growth coming from? Is it coming from abroad? Are they going to be now targeting sophisticated investors? Are they going to be changing their platform or their ethos? I don't know. Those are the questions I have, and in order to really get me to pay that price, I need to have some sort of clarity. But I also know that if you get too much clarity, the opportunity is gone. So I mean, I get it. Okay, so for my final thoughts, I do like the company. I like what they've done. I like what they've built. I like the fact that they've opened up trading for retail investors and attracted a lot of new investors. They've done an excellent job at that, but I just don't know where their next phase of growth is and how it's going to be achieved. That's the only problem I have right now with the stock. But right now it's just trading like a meme stock, so I just don't know what's going on. For me, a small allocation would make sense at the IPO price, but right now we're 30% above it. So I don't know how high this is going to go. For me, I just want to watch it, see what's happening, and then kind of make my decision from there. But I'm curious to hear your thoughts. If you have them, leave them in the comments below. I'm curious to hear. I'm always open to hearing more viewpoints. So yeah, I hope you liked this video. If you did, please hit the like button below. Please subscribe. It helps me out with the YouTube algorithm and helps you stay notified when I post a new video. Also, subscribe to my newsletter. The link is in the description. It's where I talk about other stocks that I don't talk about on YouTube, and it's the best way to stay updated and informed on anything that I'm doing. So yeah, that's about it. I'll see you in the next one, and take care.